And you know what that sound means. It means we're now live here on our YouTube channel. It's our daily show where we go through the markets one step at a time here at Tackle Trading, the halftime report. As always on a Friday, we got the regular coaches coming on in here. We've got Coach Matt, myself as your host here, Coach Tim, and Frank is back for another Friday edition of the halftime report. Frankie, how you doing today, sir?
Doing well, thank you. I hope everyone had a nice week, an interesting week in the market, right? Starts off a little cool on that breakout. Nice 2-day bounce though, right? Resets a few charts, but no complaints on my end. I complained on Monday when I hit a few stop losses. I'm sure I wasn't alone in that regard, but no complaints. Always a pleasure to be here with the crew.
Absolutely wonderful to have you as well. And pleasantries first, Coach Matt. How you doing today, sir?
Doing good. Excited to be here with the crew and really excited to get this week done with.
It's been an interesting week in the markets. There's no doubt about it. And we'll get into the analysis here in just 1 minute. Just a couple of things on my checklist I always do as we're getting started in the show. If you're a veteran of the community coming on in here to join our conversation today, welcome back. Hashtag Team Tackle. Always get that thing lit up real well to get started. Good positive energy. Love seeing the convo back and forth. And if you're brand new to the show, coming in for the very first time, make sure you click subscribe, click the bell, come back and join us on a daily basis. And if you're a busy person on the go, here's one thing that we would love to have you become a part of that we're doing every single day. It's called the Huddle Podcast. Matt, talk a little bit about the Huddle for just a second. I'll drop the link in the chat.
The Huddle Podcast is a great way to stay on top of the market on those major storylines that are happening in the market and driving the market every single day. At what time do you post it? It's about
the copies.
Noon Eastern, right?
Around noon
right
is
around
when
noon Eastern Standard Time every single day. So check out the Huddle. You can stay on top of the market in less than 10 minutes a day, typically about 7 to 8 minutes, and then come join us in the halftime report to break down the analysis.
Absolutely. And hopefully, if you're not a podcast listener, you can stream it right through the website. If you do have podcast apps, make sure you click download and get that thing subscribed to your phone or your mobile device so you can get it on the go whenever you are out and about. You can get the market news in less than 10 minutes, like Matt said. Let's get down to the analysis here today, guys. Frankie, you nailed it right out the gate. 2 days of a bounce after 3 days of, some frustration. There were stop losses, I guarantee, that were hit by most traders here this week. You've got a little bit of back and forth action, a little bit of a changing character in terms of the daily candlesticks there. And so we're going to have a conversation later today as coaches about ranking this S&P. I'm going to get Matt's read though first. Matt, 5 days of price action, pretty interesting here. What's your read on the market?
Yeah, it's obviously been a very volatile week in the marketplace. You start the week with this nice little clean breakout, getting everybody excited. And then like Frank talked about, coming into the week this week, obviously the futures market did not appreciate that nice little breakout, violated it coming into the cash open on Monday. Stop loss management Monday and Tuesday, and then really kind of navigating whether this support level right here at the 50-day moving average is going to hold, giving the market a little bit of a nice, bump back up, getting back up into the ranges. So it's been a very interesting week, no doubt about it, from a technical and a trading perspective. And, when you see this type of volatility, obviously after a clean breakout, it's going to be a frustrating week for a lot of traders. There's no doubt about that. But again, context is always important, and we are in the backs of that type of trend. So a little bit of volatility this week, additional volatility that we have not seen in recent history in the market. And so you always got to be a little concerned when the volatility does increase, when support levels get violated as well. You got to be a little concerned. But for the bulls out there, and we're all bulls out there, this 2-day rally coming into the market is exactly what you want to see. You want to see a little stabilization of price at this point, but you like the fact that support held for the first time, and you got to like the buyers coming back, coming into the weekend.
Frank, what about you? What's your read on the technical condition right here?
Yeah, I mean, the first thing that really stands out is the increase in volatility, right? Whenever something changes, I'm always going to pull back a little bit, right? Get a little bit more cautious. For better or worse, sometimes it makes me look like a moron. Sometimes I look pretty smart, but I just think it's good practice when things change a little bit. So the increase in volatility, I do think, is something that maybe pulls me back a little bit, still obviously on the bullish side of things. I think you really like that we've established, not just on the S&P, although that's the big one, we've established support on the Dow Jones as well, right? And so in the S&P here at that 50-day moving average, I now know that that should hold, right? That's where buyers came in. We saw that price action. I always expect a battle when we see this type of scenario to bounce off the 50 because now we're below other stuff, right? Intraday resistance, 20-day, 9 EMA, stuff like that. And so I always look for the pullback here, right? The pullback of the pullback. I've said it many, many times where we see a little bit of, like Maddie said, stabilization. Hey, if it just wants to run for existing positions, I'm cool with that. If I don't get a whole bunch of new trades Monday and Tuesday, I'm all right with that. Don't get me wrong. But for new trades, I kind of want to see some sort of a pullback higher low put together within this range of that support zone, followed by a breakout. So I always like to kind of reset it a little bit. And I ask that it does that, and I'm not afraid to miss out on the super bounce that sometimes we do get, right? Because I'll have an opportunity on breakouts in that scenario. So I'm going to be a little cautious going into the week. I think when we're going into next week, I think we also really want to be starting to put in our stock picker hats, right? It's not that we always don't wear those hats to some extent, but I think as we get into the summer from a historical perspective, we usually see a lot of back and forth chop and we go nowhere, right? Obviously, I don't know that that'll happen this time, but historically, that's kind of what the market does, which opens up the door for more stock picking as opposed to index trading, at least in my opinion. That's how I'll be kind of looking at it going into really the next couple of months, but specifically next week.
Mm-hmm. The stock picker environment is something that I think a lot of people are anticipating a little bit. We're already seeing it in some of the sectors, in terms of strength and weakness and all that kind of stuff. And Frank, I know you brought some charts today, right? In that vein that we're going to look at later in the show, that some good setups, right? So there's always going to be good setups out there. Matt, you went down to that intraday chart. I want to get your thoughts on the intraday on the S&P or the Dow one way or the other. Just pretty good strength here on the cash open 2 days in a row. Does that give you more confidence in these two green candles? Do you still have the caution just from earlier in the week? And the S&P ripped right back through that 4,100 level that was posing as potential intraday resistance. Anything else you want to add to these two charts, specifically the intraday?
Well, I certainly have more confidence in the Dow than I do the other indexes right now. Mm-hmm. You're talking about the strength of the market here in the Dow, and when you're talking about the strength of the market, typically you're just going to on these types of increasing volatility, violation of support, short-term pain type scenarios. The strength of the market's going to it's always going to look better technically, and so when you're looking at it, the market, and you see the market in the Dow come into this 35,000 level, it did the same thing as the S&P. The volatility brought it back down to the 50-day moving average, but because of the strength of the short-term index being a little stronger than the S&P and definitely stronger than the NASDAQ and the Russell 2000, you look at a scenario in this recovery where instead of it fighting back up against these resistance channels circa the S&P, you see it fighting back up against these resistance channels, and it's going to follow the same thing as the Dow. The problem is with the Dow, you just have a much cleaner technical environment, given the fact that now you're not fighting against that old support, new resistance. You're not fighting against that old resistance channel. You're actually breaking back above. And so the Dow, this 2 days didn't shake my confidence in the Dow that's been doing that. It didn't shake my confidence based on what we see with the inflationary situation and how it's impacting Dow components. This 2-day volatility, it did shake out a lot of short-term trades, but it didn't shake out this longer-term trend. And so I still think the confidence level is there in the Dow. Whereas when you're looking at the S&P, your confidence is shaking a little bit in the S&P. The NASDAQ is a volatile nightmare right now. That somebody get a great directional read on this. Are we just going to blow through all these resistance zones and just go back bullish, or is the short-term trend going to continue to be a volatile nightmarish condition? So it's a very difficult trading environment when you're seeing an index do this type of volatility. And even with this 2-day rally in the NASDAQ, you haven't broken a resistance level yet. You had a 2-day rally here, got smacked right into resistance and smacked right back down. 2-day rally, where's it coming into? Old support, new resistance. It certainly could break and run, but again, based on recent history, there's nothing in this 2-day rally that's shifting my short-term bias on the NASDAQ. But again, when you're looking at the strength of the market coming into this type of volatility, what happens to the Dow here? finds support at the 50. That same 2-day rally gets right back above all these moving averages. Now they're going to act as support. And so the second point I want to make, based on what Frank was talking about, was that stabilization. I talk about in stabilization. Frank, you call it the pullback of the pullback. We're really talking about the exact same thing, right? We're really talking about the exact same thing. And when you're looking at this from an intraday perspective, you see this real volatile condition, especially the last few days, right? This real volatile condition, pretty consistent price action here, pretty consistent price action here. This is the concern, right? We want to see this continue to do this type of number. And what Frank is talking about, the pullback of the pullback, would be a pullback coming down and reestablishing intraday support levels, and that trend just continually get better and better and better as we come into the futures market on Sunday, as we come into the cash open on Monday. And so you just want to see a little bit of the stabilization, and again, that stabilization could be from a volatility perspective, maybe a little bit of, decreasing volatility over the course of the next couple trading days. That could be an establishment of an intraday support level that shows you a fairly decent intraday trend on the 30-minute chart, the hour chart, that is showing some consistent price action going up, which kind of puts into the rear view mirror this type of volatility. And so it's been a fascinating week, no doubt about that. But you are seeing some stabilization, specifically today, coming out of that last two really volatile trading days. You are seeing a little bit of stabilization today. I want to see that continue on to next week, because some of that stabilization today, because the economic reports today were not that good. And so some of that stabilization today really could just be, let's get this week done with. Come on, I'm not the only trader out there that just wants it to be done with this week.
No, it was a whipsaw week back and forth. Nobody had a lot of fun this week, I can't imagine, so yeah, I'm there.
Not the most fun week ever.
No. By the way, this kind of split that you're talking about, Matt, between the indexes is also kind of being found in the sectors as well. You're going to have the same basic conversation there. Like materials are looking just absolutely gorgeous, increasing momentum, pullback into the moving averages, pivot there. But then you got the weakness in tech, you got the weakness in discretionaries, you got neutrality in healthcare. We're starting to see that. And I like the word separation, that divide between areas in the market. It's been there for a while, by the way, but the patterns are even developing even more into those areas. Yep. Matt, we're going to be ranking sectors a little bit later. Any thoughts on the sectors? And then I'm going to get Frank's thoughts.
I certainly expect there to be some awesome conversations, I'll put it, regarding the sector rankings and getting all the coaches' perspective on the sector specifically this week. I'm willing to bet that every single coach at Tackle Trading is looking at materials and saying, yeah, I like this.
Yeah, I think for most of us, it's going to probably be about the status quo, right? Still like materials, still like industrial, still like finance, still like energy. Other areas, maybe not so much, right? They might have more work. And
energy might get an upgrade.
I think so. Those will be the more interesting discussions, right? Because I don't think, the big three, specifically materials, finance, and industrials, I don't think they've done anything to shake confidence in anybody.
No,
certainly not me.
The industrials got caught up with the Dow type conversation this week, no doubt about that. Got beat up a little bit more than materials and finance, but materials is also already ranked higher than industrials and finance. So that, based on the price action this week, I'm not sure you're going to see a downgrade, but I am interested in those conversations
for sure.
The concerning areas of the market from that perspective would be, communications violating this short-term support level, now looking in terms of short-term neutrality against a backdrop of intermediate bullish action. Energy seeing we were coming into this potential breakout last week extremely overextended. Frank, like everybody at Tackles knows, you and I, we hate overextended breakout scenarios. What we love, maybe not the volatility here, but we do love stabilization, and we
like some time in the cooker.
A little bit of a high base coming into that. So, it's going to be interesting on that conversation. We already talked a little bit about technology. It's obviously playing very similar to the NASDAQ, most likely looking at a downgrade there in technology. Staples, again, kind of held its pattern, held its trend. Don't expect a lot of action in Staples. Going to have a conversation on the violation of support in real estate, as well as the second violation of support in utilities. Healthcare looking a little bit more short-term neutrality, once again, against the backdrop of bullish intermediate action. And then discretionaries had a fairly nasty week. It held up against the volatility of technology. Remember, technology and discretionary are two sectors that do perform very similar to one another. Discretionary, finally, that dam broke this week, couldn't withstand that volatility in the tech space, and that sold off fairly aggressively this week and technically looks pretty nasty, quite frankly, technically. And so you're probably looking at a fairly decent downgrade in discretionary, but you are going to see some separations of sectors more at tackle trading. There's no doubt about that. But the strength of the market that had been the strength of the market will continue to be the strength of the market, because those are the areas that recovered the best because they had the best technical patterns coming into this volatility.
Yeah, and those rankings that come out each and every weekend, I'm sure we're going to have a good, fun, long conversation about each and every one of these sectors, because there will be some discussion. Like that XLY chart is pretty ugly, actually. So it's about how do you adjust your ranking in a chart like this. That's what the coaches do each and every week when we put out our newsletter. Let's move into commodities next here, if we can. Crude oil, gold, the dollar, Bitcoin. Then we got a couple of earnings roundups that we're going to look at here today. And then Coach Frank's got some charts a little bit later in the show. Frank, I want to get your read on this one. I've been talking to Matt about crude oil all week as it's been chopping up there in that box. And who doesn't love that box? Whenever we bring that up, you can see it visually. Matt asked Tyler a question the other day. If the breakout occurs, does the hesitation or the change in momentum, does it affect your view of the breakout? Tyler said no. Frank, do you still like the potential breakout here in crude? And what are you looking at?
Yeah, it wouldn't change my mind yet. At least we still have those higher lows that have developed along the way. So getting pushed down a little bit of resistance, never that big of a surprise to me. Now, if we were to kind of break below that low that we put in, let's see exactly when it was back on, I guess it would have been the 22nd. Yeah, the 22nd of April. That would definitely change my opinion. But as long as we're kind of in this general trend line, we've got these higher lows, I wouldn't change my read of the breakout. That's where I would kind of say, you really had to pull back that far before the breakout. But as of it is right now, no, I actually kind of like where it is. And I think it had the opportunity to cook a little this week at that resistance level. Actually, I would say I like the potential breakout more this week than I did last week, personally.
Matt, what about you? Still looking at that breakout, eye in that box?
Yeah, I agree with Frank. Frank looked at the pivot point here off of the reversal here. And so he's looking at that pivot point saying, as long as that pivot point holds, that breakout's still alive. And I would agree with that. I just want to add, as long as it stays above that 50-day moving average, you're going to really like that breakout.
Yeah, you would like to see a higher one develop sooner rather than later, right?
Exactly. You don't want to see it come into that, because then what are we going to talk about? Well, you got the 50 and you got the 20 and you got the 9 and you got these previous levels, and you just got to fight up against so much there that then again, you're just looking at that breakout a little bit differently than if it holds from here.
100%.
And so if it holds from here, it lines up that breakout at 66.60 really, really, really well. And so this is, and I certainly do agree with Frank that, you're sitting here last week. You like the breakout here last week. There's no doubt about that. But I think you like it even more the longer it consolidates, quite frankly. You give another week of consolidation, as long as 62.5 holds, I'm going to like it even more. But again, you don't get to pick the timing of that. You just get to pick the zone. And you got to like the zone you're in.
I agree. Yeah, I think this is a very interesting looking chart here on crude. And that break, I still think I'll probably be looking to energy stocks personally, but
me too.
That break is going to be one of the more interesting patterns, if kind of what you said develops, Maddie, that I've seen on crude for really since we lost the momentum, right? Since we kind of shifted that momentum.
It's been months.
It's been, good, 5-6 weeks, right? Yeah. I think that's a really interesting pattern if we can hold and build into that. But I still probably will like energy stocks more than crude, knowing me.
Mhm.
Well, yeah, me too, because you're still believing in the catch up of energy
Hmm.
against the backdrop of what happened to crude last year, right? And so crude just ran so bloody aggressive there for so long that it got into those elevated price thresholds where historically we've just seen too much action on the sell side, right? Between that 65 and 70 type level. And so with energy stocks being, haven't recovered and just barely recovering its, pandemic price, whereas crude done that months ago, you still like that catch up. And then when you're looking at this technically, you're seeing this zone right there, right? You're seeing that old support zone, pretty important zone right there, about 55, between 54 and 55. You see that zone, it consolidates there. Here's the pandemic hit right there. You're right up against that pandemic price. You're right up against that old support zone in the energy stocks. I'm not surprised to see the increasing volatility in the energy space as you're fighting up against a very important old support zone acting as new resistance. You break out of that, it's a pretty clear run up into that 200 weekly, no doubt about that. But then you're talking about the continuation of this bullish mentality again on the weekly chart. And that can catch up against that crude chart, which again, pandemic price. Here's the pandemic price. You saw what happened on that weekly chart once it achieved that. Can you get another run up? If crude breaks out and runs to 75, where the old resistance zone is, yeah, you got some psychological 70 nonsense here, but you're
Sure.
really talking 74 by 75. And if you can get that type of price appreciation, man, energy stocks are going to boom.
Yep.
Those weekly
But
charts do
again,
tell quite a story
even
too.
if crude doesn't break out, energy stocks can still run.
Yeah.
And that's why you like the energy side, because you
Mhm.
don't need the breakout in crude to be successful in the energy stocks.
Mhm.
Yep.
Mhm. Love it. Love the analysis. And those weekly charts are really telling, quite frankly. Seeing crude way above its pandemic lows, where energy still has a lot of room to catch up from its pandemic lows. So appreciate the analysis there. Let's take a peek at gold here next, if we can.
By the way,
Unless you have
people
something
are
else.
front running that energy breakout.
Yeah.
Yeah.
And it's legit. You got a little bit of a pullback coming into the 9. I like a scale in approach here.
Mhm.
Yeah, I think it makes sense in this case, right? You weren't buying at resistance, you were buying the pullback. And so I would agree with that. And even if I don't, they're certainly doing it today.
Well,
Doing
and
it whether you-
again, it's the scale in, it's the dip your toe in approach before the breakout, and then you add to it upon the breakout.
Mhm. Mhm. And I think Coach Tyler's talked about that on several options report videos and whatnot, how you're adding a little bit, then anticipating to add the other part of the position as you're scaling into that trade. I think it's a good call as well. That
As
people
long
are
as you
doing
got
that
the
right now.
analysis going into the breakout, and I do believe in energy, you do.
Yeah. Yeah.
I agree.
Let's go to gold next if we can. Gold is actually pushing up against those zones that you've identified over the last couple of weeks here, Matt. Following weekly moving averages, the daily 200 is there. You've got a nice box that represents that entire zone that we're going to be challenged at. And what are you seeing here technically first, Matt?
Same thing I've been seeing all week.
Mm-hmm. Frank, how
I
long?
honestly don't have much to add. I mean, we all know the continuation of this trend is the breakout at this point.
Mm-hmm.
Yeah, I mean, that's pretty much it. I mean, you really like the way we've behaved this week, right, for
Mm-hmm.
your positions. But I would, I think everybody's kind of on the same page here at Tackle Trading, at least, where the next real signal or actionable signal, if you want to call it that, is getting through that 50 weekly, 200 daily, right? That zone, however you're looking at it, that's for me at least the next actionable place. Right now, I still expect to fight, right? Because we haven't won anything yet, right?
Oh.
We played some good D, as Maddie would say, we played some good defense, but haven't broke until we broke, right? So that's kind of, not much has changed, but you do, I think, like to see the defense that we played. Again, it's just kind of doing what technically you think it should be doing, which is always nice, right?
Mm-hmm.
KB Holmes could learn a thing or two from you, Gold.
Gold playing defense like the Utah Jazz this year. Very good defense, no doubt about that. And the interesting thing on the gold chart, if you understand the context of that one big down day we had this week, that was on a CPI report that showed a massive increase in inflation. So the one down day we did have in the gold market this week was that massive uptick in inflation, which for the gold bugs out there, they're like, yeah, but that's why we own gold.
Mm-hmm.
But in the short term, that has an impact in the stock market a little quicker than it does in the gold market.
Mm-hmm.
Yeah, and I was going to ask you guys, I mean, gold could chop here for quite some time. It still is the same, kind of setup and pattern of potentially on the breakout, right? I mean, as long as we hold the pivot point, even if it rattled for weeks, literally up here near that resistance, I don't think it would change the chart, would it, Frank?
Not as it is right now. Not at all. It could pull back and that would be fine.
I don't think you're going to get weeks.
I don't think you are either. But in the event that you did, I mean, it's hard to tell what it would look like if it took 3 weeks, right? But right now, at least, no. It could consolidate up here and put together a base for 2-3 weeks and then break out, and that'd be great, right? I don't think that I'm with Matt. I don't think that's the most likely.
It's too volatile. It responds way too much to short-term news right now.
Yep.
The volatility in gold right now is pretty high. And so I don't think it's going to stabilize that long. And I think you're going to see some price movement.
You're going to see some action a little bit before that. We'll keep an eye on it, obviously, next week and as it develops. Let's take a look at the dollar next, then Bitcoin last, then we'll get into some stock talk. Matt, there was some pretty, kind of disappointing economic data this morning. We had retail sales come in below expectations. Consumer sentiment came in below expectations. Industrial production did increase, but below expectations. What's your read on the dollar, and how do you interpret some of the economic data we saw this morning?
Well, the economic data today, retail sales had a fairly decent miss here today. The expectation was 0.5. It did come in at a negative 0.8. But again, context, retail sales last month was 9%.
Mm-hmm.
And so, coming in this pandemic and out of the pandemic, we've seen some massive increases and decreases. But when you go 9% last month and you have a short miss this month, we're going to bypass that. It's just going to happen, and that's what's happening here today. The other miss is like industrial production misses. It basically was just another data point in the inflationary conversation that if you continue to believe it's transitory, the data is getting pretty heavy against it, at least in the short term. And so the industrial production data, again, showed that a little bit. You saw the same thing out of those inflationary expectations with a little bit of an increase there too. But again, the misses were very slight in industrial. You had a 0.7 versus a point, I believe it was a 0.9 expectation. Last month it was 2.4. So again, context matters here. You had a very good beat last month, a short miss this month. Not that big of a deal in my opinion. And then consumer sentiment, quite frankly, has been a little bit all over the board in recent data. And today, the expectation was 90. It came in at 82. Nobody cares right now. Everybody cares about the volatility condition.
Mm-hmm. Well, and you're right, though. I mean, the more data that comes in, I mean, anybody who's saying inflation is transitory, they're not watching the economic data.
Okay, this is how it's going to work. And I just want to be clear on this. They're going to stop using the transitory type language once they reduce the 80,000 type of products that they analyze in the CPI data. So wait for the adjustment in the data. It's not going to be the adjustment in inflationary scale.
They're going to trick the numbers.
If you know how the CPI report has worked over time, you know how it's going to work in the future.
That's interesting. All right. Well, obviously the dollar is selling on that news. It's an ugly, nasty chart here, Frank, just down here
Tim,
testing
think about
some
it.
supports.
You could either have an honest conversation out of inflation, or you can take out 100 of the biggest inflationary items out of the 80,000 that you track, saying they're too volatile in the short term. Which one do you think the Fed's going to do?
Can I play J-Pal again? Well, listen, I mean, we had to make an adjustment to the way that we were calculating base effects. We felt that some of the measurements did not necessarily need to be there. And this is customary for CPI over the last 70 years. If you study economics, you know that we do this quite often.
Mm-hmm. Why don't you track food prices?
Well, food is such a hard, difficult thing to measure. We've decided that the basket of these other things represents consumers' expectations.
Yeah, but consumers buy a lot of food.
I'm hungry right now. You want a sandwich? I'll buy.
Are you buying?
I'll buy one. Oh, I can see them doing that though, Matt. Changing the nature, change the rules, right, Frank? If you can't win based on the current set of rules, just change the rules, right?
It's a shifting of the goalposts. We do it all the time.
They do it all the time. Bitcoin last here from a market skyline perspective. Then we're going to move into stock talk. Obviously, it's been volatile. It's still in the box. It's finding some support here today. Frankie, obviously just an interesting couple of months here for Bitcoin. This week, you had a changing character pushing down towards the support. What's your read on this technically, Frank?
Support probably needs to hold short term, or we could be seeing some selling. You know, for the first time in a long time, if you wouldn't mind going to the weekly chart on Bitcoin, for the first time in a long time, we're pushing into that 20 weekly, right? Does that matter? I don't know, but I know it hasn't happened for a long time. If we break that floor, that'd be a real change in characteristics, right? So that support, it needs to hold for Bitcoin, I believe. Right now, new trade wise, it's in the box, right? You know, as long as it's in the box, I don't think there's a new trade. If it breaks that support, well, that would be a bearish signal. Whether it would be a bearish trade or not, I guess would be up to you. But as long as we're in the box, no new trades. That's an important support zone in my mind, though. That thing does need to hold because, you know, the people I know who are involved in Bitcoin, they're bulls, right? I want to see that hold for their sake, if nothing else.
Matt?
I don't think you want to know what's in the box if it breaks that box.
You didn't want it to go back to the box if it breaks to the downside, right?
You're gonna wish it was still in the box. No, I mean the box represents the short-term range, and obviously you're looking at this as a head and shoulders type formation at this point with the left shoulder, right shoulder, little tiny head up here, left shoulder, head, right shoulder, horizontal type support level. I am not removing my box. But if you draw that line right there, that's a little bit of a neckline as well.
I think you might have to redraw the box, bro. You got that
green
candle. The green candle sneaking out of the right side of the box.
That box got drawn when it broke this volatility right here. Right there is when when I put that box on this chart. I am not removing that box until the box is gone. But in terms of this, you do have a little bit of a problem here where you have that traditional neckline violation, and then you violate that horizontal against the backdrop of that.
It's not a good technical look, at least if you're a bull.
You're looking there.
Yeah. I think that would be your next testing location, somewhere in the low 30s.
And anybody that has not been participating in Bitcoin in the last year is going to be like, this is what I've been waiting for. This is what I've been waiting for. We'll see if they actually do something about it in that type of volatility.
Everybody wants a sharp sell-off.
Everybody wants a sharp sell-off till they see what a sharp sell-off looks like.
That's right. Yeah, that's right.
So true.
That's right. All right. Obviously we'll talk a little bit more about crypto here in a minute when we talk Coinbase earnings, but let's make that transition right now. And if you're out there and you're watching the show right now, appreciate you guys joining us on a Friday. Been a back and forth week of markets. Markets are bouncing here for a second day. I only got 10 thumbs up. We got a good audience out there. Got a lot of people attending, but let's get those thumbs up on the analytics and help get the word out here on the YouTube channel. Maddie, let's go into stock talk next if we can. And there's only a couple of companies that reported earnings here today that grabbed my attention. But one of them, a very big name, a couple of the very popular brand names and in the market consciousness right now. Let's start with Disney, though, one of the bigger companies out there in the market. What did you learn from Disney's earnings report?
Very simply here, Disney came in with a nice little beat on EPS numbers. Revenue was down a little bit year to year and against the expectation as well. And then we had some subscriber growth concerns. I will turn it over to you on that. Let me give you the raw numbers, though. 79 cents against the 29-cent expectation. So a really good beat on EPS numbers. Revenue came in slightly light at $15.6 billion against the expectation of $15.9 billion. That resulted in a 13% decline in revenue year over year. Lukewarm in terms of their raw numbers. You had a really good beat on EPS. Revenue was on the light side. Year over year revenue was on the light side. And then from the context in terms of subscriber growth, I don't want to say I'm concerned about it. but there was some in terms of projections. Tim, what did you see in their report from that perspective?
Well, number one, they missed on the expectations. So there's
Yeah.
always going to be that part of it. Analysts and investors alike, we set these bars. And if you come in and you miss on the bar, that's going to be a big part of it. So you miss on the expectation. I believe the number was 103 million they posted. There was 109 million expected. So they didn't get as much sub growth. They also had their average revenue amount per user come in at about $3.99. I think people were expecting that to be a little bit higher. They've launched a couple of new different like subset products like this Hot Star Plus I didn't even know about, quite frankly, because I don't consume that content on Disney. And so that didn't exactly come out and exceed expectations either. I think really what it comes down to, Matt, is that a lot of Disney's growth is based on this Disney Plus idea, their online models, getting this revenue going. And when you miss on sub expectations, you're going to see a miss on the earnings response. Personally, I think that's what it comes down to.
And I agree, but I also think Disney is in that rough stretch of original content.
Mm-hmm.
You guys remember when Netflix was in that rough stretch of original content?
Mm-hmm.
And then House of Cards came, and then all of a sudden over the course of the next few years, they started building their original content. Disney had that rapid release where everybody just gravitated to it. And then they had Mandalorian, original content starts building. They're in that lull of building their original content. They have a ton of content coming down the pike to help in that as well, both from a Marvel and a Star Wars perspective.
Mm-hmm.
I'm not worried about that. I think they're in a little bit of a lull right now on subscriber growth. I think that improves over time. I think if you were looking at where Disney is today from a subscriber growth in comparison to where they thought they were going to be 2 years ago, Disney's in a very good position. I think, honestly, we're nitpicking because this week's a really bad week to release earnings reports.
Mm-hmm.
And I think we're nitpicking a little bit.
Mm-hmm.
Most of the earnings numbers I saw this week, it didn't even matter what they did. They went down.
Mm-hmm. Mm-hmm.
Like positive beats across the board, they went down. This was a tough week to report. I'm not concerned about Disney's subscriber growth numbers, though.
And I don't think the market really is either. Down 2.5%, you're within the market maker move, right? And you even get a price response here, off the open that is at least positive. But the short-term chart here now is completely ugly, Frank. I don't even know what you'd be looking for next. What are you looking for to develop on this chart?
Gosh, I'm
Nothing
probably looking
from
for
a
other
short-term
charts.
trading
Yeah,
perspective.
I
There's
mean, nothing at all. But, playing, 2-3 weeks from now, continue this momentum off of this low, work into those falling moving averages, that zone that Maddie's got drawn on the chart there, pull back, create a higher low, reclaim the short-term moving average, specifically the 9, show me some reversal characteristics. Maybe then we could talk.
And in all of that, you're looking at about 2,000 better swing trading stocks.
Exactly.
This is an investor
exactly.
stock. It is not
a
a
one cool thing
stock.
You can do, Matt, and this is a habit. I don't know if you guys do it too, but I'm not really interested in Disney, so I'm not really going to do it with Disney. But if it was something I was interested in, I would actually draw that. I draw my line up, then I draw it back down, having it create a higher low, and then draw it back up, breaking that resistance. And so every time I look at Disney, like, yep, that's what I want. It's not there today, moving on. So it can really quickly churn through. I mean, hey, if it's just Disney, it's easy to get through one chart in your watch list, right? But if you do that on lots of stocks within your watch list, it becomes a lot easier to manage a big list of candidates.
And what I'd say on Disney is good luck doing that on Disney in a short-term swing trading environment.
Yeah, Disney's not. It's been a while since they've been. Yeah, it's been a while since they've been a swing trading stock.
But even if it's to the investors,
well, even if it's investors, though, Matt, I would argue that I still want reversal characteristics to kind of help get me in. Right, I don't want to buy it today and have it at the 200-day moving average, next week, right? And so even if it's not, because I don't think Disney's a good trading stock, at least directionally speaking. It's been a while since that's been the case, in my opinion. I still think it's a good habit to get into, just because I'm not a huge fan of the Disney from a trading perspective.
Mm-hmm.
No, again, nobody should ever trade Disney. It's an investor stock, period.
It is.
And a wonderful one too. One that you should
be
excited about.
Yeah, can't complain too much, right?
Long period of time.
You've got some good price appreciation on Disney over the years.
That's right. What do we got next here, Matt? Airbnb, maybe Coinbase. I know there was a couple.
Coinbase with their first response here, and a little bit of a negative response, but the concern for good old Coinbase is the fight against the support channel right here. Coinbase just reported $3.05 versus the expectation of $3.88, so a miss on EPS numbers. I don't have the expectation of revenue. They did report $1.8 billion in revenue. Outside of that, that's all that I got from raw numbers perspective. Again, the concern here technically is this support battle it is currently facing here on Coinbase. We don't have a lot of historical price to look back against. Obviously, IPO right here. It's been pain. Obviously, with what's been going on in the crypto space, specifically Bitcoin, obviously it's understandable. But if this violates, there's nothing underneath it. So I have no clue where it could go.
We didn't learn much new about this company from the report. Let's call it like it is. I mean, they generated their revenue off of, obviously fees. They charge, one of the higher fees in the industry. They had a lot of fluff out of the CEO on the report. The numbers came in and missed. They didn't have a revenue expectation that I could find either, Matt.
There wasn't one.
It just is what it is. So you miss on EPS. It's your first earnings report. Now the chart maybe can start to develop some from here, but we didn't learn anything.
Yeah, it can develop a short under 250.
Absolutely could. Yeah, absolutely could. Frank,
that's what you're looking at on any trade.
Oh, there's downward pressure too. Frank, do you start trading after the first earnings report on an IPO? Do you give it a couple? Do you wait for moving averages? I know I'm very patient with it. Matt's very patient with it. Tackle trading in general is usually very patient with it. What about you? How do you approach this situation?
Yeah, I might be a little faster in being open to it, but it's got to stand out. And I don't think this stands out. Now, talk to me a month from now if we continue to battle at support and resistance and then we break. Either way, I could be talked into something. Right now, there's not enough history. I'd agree with Matt. If that floor breaks, why would you buy it there? Who knows where it's going, right? But again, from a trading point of view, I've got all sorts of options. I'm not going to go out of my comfort zone. 100%. And as of right now, this would be there. But again, if we spend some time here, run up, create a lower high, come back, maybe a cup and handle develops over several weeks, then that maybe does become an interesting bearish play, or maybe we do double bottom here, right? Sooner or later, that probably will happen. I don't think there's any great reason to believe that it's now based off of the reaction here today, but patience and getting that repeatable pattern, right, is the name of the game. And I don't think these guys have enough, for me at least, going forward. I would just say that if that support breaks, I would definitely call that a bearish signal. I wouldn't think it is a tradable signal for right or wrong.
Very good. All right. And in my personal opinion, like I said, we didn't learn much. We got to get more data and all that kind of stuff, not only from technicals, but fundamentals as well. Matt, what about Airbnb?
Last, we got Airbnb here. Let me just get the symbol in there. A, B, and B. Airbnb also fighting against a fairly important support battle here. They reported a negative 92 cents versus the expectation of 115. Revenue came in above the expectation at 887 versus 705. A little bit of mixed analysis, but this is a company that has a hard time making money.
Big loss, but not as big as they thought they would. It's down here at the very bottoms of the chart near the IPO price. You saw the huge run up into that first earnings. It's been in an ugly downtrend since then. Frank, unpack the chart for me.
Looks like a big frown, doesn't it? There's not a lot to like here. You do have the low point not too far away, right? That was back in like December 15th at around 120 or thereabout. So maybe that support can hold again. I mean, that's about all you have left to hang your hat on right now. I hope you're not a bull on this as of late, because it's giving you probably lots of reasons not to be. That support's the only thing that we have, and it's one data point, but it's the only thing that we have, right? From between these 2 days, this 2-day floor that we put together, there's not a lot to like about this chart if you're a bull.
This feels like the kind of earnings report that if you had a bias on the company coming into it, you could confirm your bias, but it's probably not good analysis. Like if you're a bull on Airbnb, you would point to the improved booking numbers because vaccine rollouts are improving that and all that kind of stuff. If you're a bear, you point to the huge loss, Matt, in a company that's not made money yet and still in a nasty downtrend. So in my opinion, it's a stay away. But I don't know if there's anything you're seeing in the chart there, Matt, that you want to
add? From a buy side?
No, either side.
It's a complete stay away. Yeah. It's just when, again, you have this type of price appreciation in the short term, you see all these battles against support channels, but once it violates, there's nothing really there. Once it violates that support, there's nothing there. Where does it come into? The only pivot point it can, the old support level, the only one that formed from this price to that price. Look at the volatility. Now you're fighting against that there. You violate that, it's a stone throw down to 120. You violate 121, I don't know. There's nothing there.
There's nothing below it.
Like there's nothing to analyze. There's nothing there.
Yeah. Yeah.
That's why you never catch falling knives. There's nothing there to stop it from going down further. So it's got some pretty important test of support. And I don't think, the believers and the investors in Airbnb are going to be too shaken based on this report, quite frankly. And until the IPO support level gives, and the IPO support level is IPO support level right there. Until that IPO support level gives, the investors aren't going to care. But that level gives, they're going to have questions.
Yeah,
I agree.
I would
too.
All right, moving from some ugly charts into some pretty charts, I'm hoping here, Frank. Hopefully you can bring something to us that we can get excited about, because these charts that we just looked at, obviously earnings responses, the news is there, but they're not really in development.
Tough week to report earnings too.
Yeah, you got a lot of those responses this week were that way.
Yeah.
Frankie, what you got this week for us?
Well, let us see. I got a few different things. I got one. I'm just going to start with this one. I don't know where this one's going to go. I've got two reversals I want to throw to you guys and see if either one of them, and I should probably say potential reversals because I don't think they've given us enough information yet, if either one of them is compelling enough for you to be interested in. So these aren't going to be some top of the charts. These are going to be some reversal candidates. And so I've got two of them. I wish Mark was here because one of them is NKLA, our old friends at Nikola. And the other one is 3D Systems, DDD.
Do you want me to go first?
Well, I'll go first, and then you can say.
Give me your analysis on. Let's start with Nikola.
Okay, so let's go with Nikola first. All right, let me come back to my chart here so I can see. Okay, so things to like about Nikola. I mean, obviously it's been beaten down, right? That doesn't take anything but a pair of eyes to see. A couple things that it has going on that brings it to at least my attention is, number one, we've created a higher low for the first time in a while, right? That low there on the 6th was higher than the low there on April 24th, or approximately April 24th. So if you kind of think back into April, we rallied up after breaking some support. We rallied up, had a bear retracement. Bears came in, pushed it down, and then kind of out of the blue, if you will, we created that higher low and have now held that point, right? So that's kind of the first thing that stands out. We haven't broke resistance. That's why I still would say it still has at least some work to do, but resistance is lined up with that 50-day moving average. So it's a tough level to break and very well may not. That's a tough fight, right? But if we do win that fight, we kind of win 2 for the price of 1, right? Because it is a reversal, there's a lot of upside. Of course, there's also a lot of challenges. But the one thing about Nikola that I liked was really from a risk to reward perspective, right? I've got my higher low. I theoretically get my higher high via the break of resistance in the 50-day moving average. And I don't really see anything that, as far as scares me, we've been at all these prices, right? But until we get into that $17 range, that pivot that we put in back on that bear retracement back, mid-March, I don't really see a lot that's kind of saying, boy, this can really beat you down, right? And so that's kind of what jumped out to me on Nikola here. So I'll throw it to you, and you can tell me why I'm wrong or why I'm right, if you would like.
Technically, you do have the analysis in a short-term reversal. You have a fairly consistent bearish downtrend here. And again, if you looked at this from a yield perspective, that's extremely consistent. And then obviously you have a change in behavior and characteristics from a price action response towards the right-hand side of the chart. You have an increase. You have your similar bearish retracement here as you did there, But the difference is a little round top here, a little rounding bottom there, increase in support, horizontal resistance that lines up very nicely against 13 where the 50-day moving average is. A breakout there probably sees a quick journey to 14 with a retest of this choppy action over here in the previous pivot. Outside of 14 though, Frank, 17 is the next stopping. And 17 is a really, really good trade there. So technically, I would say you have the analysis there for a short-term reversal, and that's it. For me, Nicole is kind of like I'm an NFL team, and I've removed it from my draft board for violation of the S in ESG.
Fair enough. So it's more the ticker symbol and less the pattern.
It's more the former CEO.
Yeah, take the pattern, put it on any other stock, and I'm gonna nod my head, but it's no longer on my list of tradable candidates.
Yeah, Nicola doesn't get bullish cash flow money.
No,
Fair enough. Yeah, fair enough. I can't argue. I can't argue with that.
Listen, not everybody has everybody has their own things from a trading perspective, right? Technically, it's lining up very nicely for a potential reversal with a quick journey to 14 by 17.
Yeah, I would agree. I would agree. And 3D is not a whole lot different. Maybe there's definitely some subtle differences though, right? We kind of recently created a lower low, ran back up into resistance. Once again, that 50-day moving average playing a little bit of a role here. Have yet to put in that higher low, right? Maybe we're trying to right now, but let's be honest, that's just a maybe, right? So much like Nicola, I think we would need to actually build off of this low that we put in yesterday and some upward movement we've seen here today, and B, of course, take out that resistance. I don't think there's as much upside potential percentage-wise technically on 3D, but maybe
it can fly though.
It can fly. Oh, it can move. Yeah. It can move and shake. I kind of see the windows at around 28 by about 33 personally on 3D if we can break through that resistance. So just a couple of reversals. Which one do you prefer, Tim? I'm going to make you pretend that you don't know the ticker symbols, Tim. I wish I could have done that.
No, I'm good with that exercise. I got no problem with that. In fact, I actually still like 3D more from a chart perspective on my own personal assessment. I'll tell you why. There is a difference in character in these two. Nicole has been under the 200 moving average for the better part of 6 months, and 3D actually is holding the 200 period SMA there on those pivot points. Earnings response was very positive with a big spike in volume as well. So I kind of like the run up into the resistance. It's going to take some time to chop into that. But if you catch a breakout, sure, 28 by 33 is definitely tradable there. But I like the nature of the pivot relationships in response to where the earnings was and the volume pattern here on 3D more than Nicola personally, Frank, regardless of the ticker symbol. And I don't know. And Matt, what about you? Because I like that chart. I actually see the reversal here pretty good.
Well, you got a pretty consistent price response as its journey down to the 200-day moving average coincides with an earnings release that, from a raw numbers perspective, they actually came in pretty decent, beat on EPS numbers and a slight beat on revenue numbers. But the response was really, really, really good here on Tuesday this week. And again, very, very choppy week. So you're looking at this and obviously you have a shifting character here, but the shifting character is not market related. It's because of the positive response to a positive earnings report that just so happened to be at one of the best investor zones to make decisions right there at that 200-day moving average. And so I kind of like 3D a little bit more too, because I understand the shifting characteristics here. I like that it's trying to find a short-term support right there at 20, which would be the increase from the 200-day moving average bounce. It's a choppy horizontal resistance, but you do have horizontal resistance that coincides very nicely with the 50-day moving average. Obviously, that played a significant role over here. It played a role earlier on their earlier this week on their earnings response. So I don't like the buying the dip mechanic here. And the reason being, quite frankly, the choppiness of the stop loss is just not there. It's just, you don't have a clean stop under 20. So I don't like the scale in approach as you're fighting against that breakout. But 3D, putting it on the radar and waiting for it to violate that 50-day moving average, we could see some good price response once we do that. So I think it's a radar candidate. and then get it, keep an eye on that 50-day moving average. If we can violate that, I kind of like it. And I like it because of the price response post earnings.
Yeah.
Fair enough. All right. Good deal. Good deal. I always like looking at reversals. They're always fun, right? But not everything is reversal. So, Maddie, can I talk you into Sally Beauty Holdings, SBH? So they had a big gap on earnings here last week. I'm just a gap out. This pretty good response.
Marty found the trap. Yeah, I like it.
It was some nice movement, right? Stalled out, kind of hand in hand with the market, right? Where, it's kind of sold off along with the market. No real surprises there. Pulling back into that old resistance, that old high from back in March. Dojiing yesterday, trying to get a little bit of upward momentum established here today. Not a lot of resistance from a historical perspective until we get into the low 30s here on Sally Beauty, in my personal opinion. Could I talk you into some sort of a little pullback play on this earnings pullback?
Yeah, this was a really, really good earnings report coming out of Sally Beauty Holdings late last week. They came out with 57 cents a share versus the expectation of 14. Revenue also beat by about 10-12% as well. So good beats on EPS and revenue. And then obviously it's understandable that Sally Beauty takes a little bit of profit taking sessions as the volatility in the stock market kind of took hold this week. But again, when you're looking at this as a breakout followed by a retracement, otherwise known as a bullish retracement, and you see the heat coming down into that support, and you see a doji candle followed by an upward movement in price, Marty hits support. Marty wants to play again. This is pretty standard step system bullish retracement mechanics. You have an increase in volume on your upward movement. Obviously, that's because of the earnings, but you do have an increase in volume on your upward movements in price, contracting, decreasing volume on your downward movements in price. See, this would scare a lot of people. It shouldn't scare anybody as long as you're forming a higher increase in support and as long as volume is contracted against the upward movements in price. And so you see this more as profit taking than fear-based selling. That's a positive reaction as it's coming down into that support at 22. You see that upward movement in price. The only thing last to do is put that on an intraday chart and map out the trade, honestly.
Tim, do you agree?
I agree 100%. Yeah. I love it.
So, yeah, that one's not too you're either down with that or you're not, right? You either are interested in those
you either like money or you don't.
So, yeah, that's a fair way to put it. But
I'm not saying that on Sally Beauty. I'm saying that based on bullish retracements, that based on the analysis that I laid out, that has a high probability of successfully hitting target number one.
Mm-hmm. Yeah, and it ends up being a very good risk to reward, right?
It's the best risk reward you can have in a pure step system pattern.
I would agree. Yeah, I would agree. Yeah, I figured you guys would like that one. I imagine that will be right up Coach Tyler's.
Coach Tyler would be like, oh yeah, but do you know how much money we can make at target 2?
Yeah, Coach Tyler would be like, I'm already in, dude. What are you talking about?
Can I sell a $26 put option to go buy out of the money call options? Like that's Coach Tyler on this type of setup.
Sure.
He'll like that one.
We're not recommending that to anybody.
No, just always want to look. All right, let's do one more here, and let's do Lumen, LUMN. I think this is a very interesting chart right now. So before I go into my spiel, what do you guys think? Just a kind of first glance here, a little breakout here on
Lumen. A little hesitation, high base breakout. Yeah,
I like it a lot. I'll give you. Well, go ahead, Frank.
No, Tim, go right ahead.
Well, so many times it's just like the last stock. The pattern developed after the post-earnings response, right? You had the gap out, backfill. It was a different pattern than this, but you have a pattern that is now developed after a post-earnings response. Lumen was in that kind of rounding type of bottom pattern over the course of those weekly charts. You can see it Earnings comes out, big green candle, pushing it into resistance. You're at the 200 weekly moving average now here, Matt. And I'm interested if that chop back there would affect my trigger. I'd have to map out some of those things. But in general, I like the reversal characteristics off those lows. I like the response to earnings, and now it's basing up against a resistance point. So I'm a yes here, Frank. Matt, what about you? What are your thoughts?
I'm a put it on the radar, but not yes on the analysis yet. And the reason, very simply, I do like this hesitation here. I do like the breakout of this short term, but when you look at this historically, I just think 15 really stands out to me. And so when I look at this on that weekly chart and I look at that right there, that just $15 just really stands out to me. And so I just don't think you have the return to justify it because of the strength of 15.
Mm-hmm.
And so I'd be an out on that, on Lumen under 15, but it's obviously within the zone of that 200-day moving average at 15 too. My analysis would change with the breakout of 15.
And I would agree with that. That's exactly what I was thinking, Matt. That's why I wanted you guys to go first. I'll add, if we can close this breakout, while I would agree with Matt, the trade is the break of 15. I would agree with that, Maddie. I would agree with Tim in the sense that holding this little breakout in between 14, 50 and 15 is a big win for the bulls. That would get us.
I agree.
That 200 weekly for the first time in a very long time. So I would be open. I just think the risk to reward would be very difficult. Theoretically, I'd be open to buying this little breakout right now, going to 15 as my first target. The problem is that's very tight, right?
It's tough. You got an ATR 45 cents.
Exactly. If that resistance was at 1550, if resistance was, it's not, but if it was, I would be very open to the first breakout. 15's a fight, I believe. Double top, big price history. So I would agree with that, Matt. I think our signal, our really good signal is the break of the 200. I think our trading signal is the break of 15. So I kind of agree with both of you.
And I certainly agree. And this is going to be an agree fest for a second, but it's just the way people process data on the chart, right? Not everybody sees everything. And so when you're looking at this in the short term, you're saying, yeah, you like the analysis going into that. You look at that on the weekly chart and you're staring at that 200 weekly. You're just staring at that 200 weekly saying, yeah, if you can break up, awesome. But I think all of this leads to that $15. And so everything that you guys talk about just builds the confidence for the trader above 15.
Yep.
For the trader that trades Lumen above 15. You like the analysis, but again, all that analysis leads to 15.
Yeah. Oh, I'd agree. I'd 100% agree. That was exactly where my head was on it too. That's why I wanted to throw it to you guys first to see if you guys were seeing it that way, or maybe
I'm going to add that one to my watch list, Frankie. I like the developing.
I'm 100% keeping this on my watch list. The break of the 200 for the first time in forever, the 200 weekly, that's no easy task, right? Look at all that momentum it had last time.
You're also talking about 2 years of a stock going from pretty consistently, 8.5 all the way up to that 15. This is really that first time you had an opportunity over here. This one was overextended on the breakout, but over here you had that opportunity. It obviously didn't do it, and there were reasons for that, i.e. pandemic. So it kind of came out, right? And now you're recovering that pandemic price here. And so I do like it. And you do, remove the pandemic over here, you're kind of in that same scenario where you were in this very long-term downtrend looking at a reversal. This just continued that and hesitated that potential reversal. Now you're looking at it the same way. 15 looks saucy, no doubt about that, but I do think patience pays here.
Agreed.
Love the analysis, guys. Frankie, as always, I appreciate you bringing some good-looking charts here to our show on a Friday, and we're going to have our scouting report meeting here in about an hour.
What was your favorite of Frank's picks?
I like that Lumen developing chart a lot, but I did like the DDD probably more. That was my favorite. The one reversal off the 200. Was it triple D, Frank?
Yeah, 3D.
Yep. I got that one written down. I like that one the most. What about you, Matt?
Oh, Sally stood out to me.
You like
Sally's
the gap
beautiful.
out, backfill, look good reward to risk on that one. So Frankie, as always, fantastic job, my friend. Appreciate it. I know Team Tackle always does as well.
But
guys,
a bullish retracement is my favorite pattern in all markets. It's a complicated pattern to trade sometimes, but like Frank says, the reward to risk, there's not a better pattern out there from a pure reward to risk perspective.
Mm-hmm. Yeah, and you always have to like that because it can do anything, right? No matter how pretty it is.
You don't have the probability you have when you have like a high base type breakout scenario, but again, you more than make up for that in target 1 reward to risk and target 2 reward to risk.
Sure, I would definitely agree with that.
Sure.
All right, I'm done.
Go back on the markets. Let's get final thoughts. That's our show, and that's actually our week here on the halftime report at Tackle Trading. Been a back and forth week in terms of first 3 days down, and now we're moving 2 days up and actually kind of holding these intraday gains. Let's get Frank's thoughts first. Frank, final thoughts for the team out there.
I think we are going to be more and more in a stock picker type of market going into the next. I always kind of assume that's the case going into the summer. I do kind of buy into the, historical analysis that fourth quarter's good, April's good, summer's moves a lot but goes nowhere type of a market, which really leads to, individual stocks. And so that's kind of how I expect to be approaching it, really going into the next several months. We'll see if that's if the history holds up. It doesn't always do that. And I'd be fine if it just wants to be super bullish. That's cool with me too. But I would watch out for that. We still do have earnings. Don't get too complacent. You've got some big names. Our old friend Applied Materials next week, John Deere, Cisco, Home Depot. So while there's not a lot of names, there's some big names, right? And it's easy to get out of earnings season and think, whew, thank goodness that's behind me, and forget to check the earnings announcements. Don't be that trader. There's always somebody right around the corner, right? Disney this week, some big names next week. Don't chase. Let your patterns develop, right? You look at so many things in tech, and some of them are so beat up that it's starting to be like, that's interesting. Still need to know what you're looking for and what your signals are going to be, right? We can do that right now, right? We can say, hey, what do I need to see before I get back into the semiconductors or, into whatever your symbol is? Get it on the radar, know what you want and why you want it, and maybe you'll get it, maybe you won't. But if you don't get it, no harm, no foul. Right. So, there are going to be some stocks out there, I think, that have been beat up enough that are going to be tempting to us as traders. Probably in large part, it'll be their name. I like this stock. I like this company type of stuff. Maybe it's not quite time yet, but you can definitely start laying the groundwork for what you need to see to get building trade. So it's not 4 days after you get your signals that you're thinking about taking a trade.
Mm-hmm. Very well said. Great advice right there for everybody out there. Matt, final thoughts from you.
Yeah, Frank, like the old Boy Scout model, right? Be prepared.
Exactly.
Know what you need and just be patient and let it happen. If it doesn't happen, who cares? No harm, no foul, right?
Yep.
My final thoughts are this market had an early weekend after the cash open. Huh? It's done. Like it's like we're done. This is the backdrop. You've had us deal with a lot of volatility. This is the market saying we're done. It's Saturday for us.
The market went sailing.
Right. No, it's been a choppy, volatile week. But again, coming into the weekend, those first 3 days in the market were very tough for the bulls. And like I say a lot lately, we're all bulls, right? So it's been a little tough those first 3 trading days, especially following a little bit of a breakout. Market is reestablishing support levels. Sectors are starting to separate. These types of volatile conditions actually allow to really see where the beauty of the market is and where the weakness of the market is. And so I think we're going to dive into those sectors. We're going to dive a little bit into those industries out there, and we're going to get those rankings out there appropriately for Team Tackle. Team Tackle, you are the absolute best. And like the market, I'm going to take an early Friday as well. So love you, Team Tackle. Make sure you're checking the reports of the weekend. Make sure you're checking the newsletter to see any adjustments in the rankings we do from a sector perspective. And outside of that, we'll see you on Monday in another edition of the Halftime Report.
Yeah, don't forget Mark's Mind of the Trader at the closing bell here in about an hour and 20 minutes.
Remind people.
Oh, hey,
An
there's
hour and
Mark right
20
there.
minutes. We'll go over commodities, go over the last second thing. See if we have that Friday ramp up after a long week. But it's been a fascinating week. Everyone have a good weekend.
And I dropped the link to the events page. So our Tackle Trading Pros, make sure you come and join Mark, Coach Mark at 3 p.m. Eastern. You can find the access to the webinar right there on that events page.
All I want to do is show Team Tackle Mark's picture.
Not yet. Nope.
Too soon.
Not yet. I'm eagerly anticipating that as well. But we'll have to let that be a teaser there.
He
for
looks
maybe,
good.
He does. It's good. He does. He likes that
Once
picture.
again, I wish I could record that soundbite.
I'm just saying, we got trading labs coming very soon. Coaches are going to have their own trading lab, their own little teams. I'm excited about it.
Pretty cool.
I don't know if you know how this works, Mark, but they do record our YouTube live stream. You could go back and pull that soundbite if you'd like to.
Hey, don't tell Mark how to do things.
Tim,
You could tell Mark that all day long. He'll
Mark
never figure out how to do it. He's just like me.
I'm gonna learn how to master sound.
And
I'm gonna go through halftime reports. There's some gems. I could have fun with this.
You could have a good time.
Don't you dare tell him to do those types of things.
Ideas out there. It's in the ethos. It's in the ethos.
Inside baseball right there. All right, guys, we're out for the weekend.
We're out, guys.
Have a great weekend.